I have that initial conversation, not someone else.
Right.
That client needs to know right away that it's with me that they're dealing with, that I'm in the driver's seat. I speak with them, put it on the CRM, talk to the client with the CRM open, so you're taking notes on everything that you're saying. Don't trust your memory.
What's up, everybody? Thank you for joining us for another episode of the Mortgage Pro Podcast. I'm your host, Eric Braun, and on this episode, we have a gentleman named Terry Hygino. We talk about his transition from being a realtor for 4 years to being an LOA to now being a producing loan officer. We talk about the struggles of the mortgage business compared to real estate or being a realtor. He's just recently made a transition, so we touch on that. A lot of cool, valuable information for you guys. And as always, remember to like, share, comment, subscribe, and hope you enjoy the episode. All right, the man, the myth, the legend, Terry Hygino. How are you?
Great, man. I'm really happy to be here with you, man. Thank you. Thank you so much for inviting me.
I appreciate you taking the time out and spending a little time with us today. I know the listeners are going to get a lot out of it. So let's first start. I always like to start off with people's background just to build some context and let everybody know who you are. So tell me where you're from, where you do business now, how you got into business, maybe. The floor is yours.
Yeah, for sure. Well, I was born in Brazil, came to the United States. I was 10 years old. So I was able to get, my first language is Portuguese, but I came to the US early enough where I was able to learn and be fluent on both. And then I lived in Massachusetts, grew up in a town called Revere, right next to Boston in the suburbs. And then, yeah, I'm in the Massachusetts market mainly. And I do a lot in Massachusetts and Florida. In terms of business, and yeah, those are the places I focus on the most.
Is it a lot of Portuguese speaking clients? Is there a lot of Portuguese people in Massachusetts and Florida? I know Florida, definitely.
Yeah, so in Massachusetts, I think Massachusetts is the number 2 state with most Brazilians. I mean, Portuguese speakers in general, but I mainly deal with Brazilian clients. Florida is number 1, but in Massachusetts alone, we have 1 million Brazilians.
Wow. All right. So I'm sure speaking Portuguese definitely helps.
Yeah,
and now how did you get in the business?
Well, I was 21 years old, had no idea what I was going to be doing with my life. I was dating my wife now, and I used to have an online store with my dad. We used to sell stuff on Amazon, and we did really well, honestly, but I just didn't want to really be working with my dad anymore. And I'm like, what do I do? I had dropped out of college, was really lost. And I had a friend that was doing rentals as a realtor in downtown Boston for mostly students, professionals. And he was telling me, hey man, if you want to get into real estate, doing rentals downtown is how you get your foot in, how you make quick money, how you build databases. Let's do this. And that's how I started. I was a realtor doing rentals for about 2 years. From rentals, I went more into sales. And then I was a realtor for a total of about 4 years. And one day I decided to change. One day I actually was doing a deal with a loan officer, and she told me she needed an assistant. And even then, I was kind of in a point where some realtors get to where they feel like they've plateaued. I was not doing that many deals. It was either I go all in or I get out. And an opportunity came on to be a loan officer assistant in 2019 with a loan officer that she was doing probably 50 million a year. So she had a pretty good production. The good old low interest rate days. Everything was booming. So she brought me on. She needed someone that spoke Portuguese.
Gotcha.
So that's how I got in the business and real estate in general, you know?
Came over to the dark side.
Yeah.
So you were a realtor for 4 years. That's interesting. A lot of people always ask me, like, they reach out to me, usually younger people will DM me on Instagram and say, should I become a realtor or should I become a loan officer? And I want to put out a video and a full breakdown of, I think, the pros and cons of each, but I would love to hear from you because you've done both. Why?
Yeah.
What was good about being a realtor? Maybe what do you like better about being a loan officer? Share a little bit of your experience and thought process on that.
Yeah. I mean, when I was a realtor and I went into to becoming a loan officer, I thought that I was just going to cruise by. There was not going to be much of an adapting phase, that all of my experience as a realtor was going to apply as a loan officer. And boy, was I wrong. It's the same business, but at the same time, it's completely different what we do. But both things have one thing in common, I think, which is relationships and lead gen. You need business coming in to either show homes or to give out loans. So that's something that I already had established relationships, colleagues in the business, that when I went in, they knew how I worked, they knew me, and a lot of people gave me a shot because why not, you know?
Right.
But I think the biggest difference, and one, I think it's your personality. What do you like to do? Do you like to be kind of the nerd behind the computer, or do you like to be opening doors, being more of a salesperson every single day, and holding hands through nervous breakdowns of clients, you know, which you do as a loan officer as well. You also wear that hat, but a lot of the times I feel like you kind of put that on the realtor because that's more of their role.
Right.
So I think, yeah, sorry, go ahead.
No, go ahead. Sorry.
No, I was gonna say, so I think it's more of a, like, what is your personality? Do you want to wake up in the morning and drive around like crazy, show houses all day, negotiate all day? Or do you want to be behind the computer screen, kind of dictating, you can do this, you can do that? And there's pros to that too. Like I'm gonna go to Brazil for a month and I'm gonna be able to do my job from there. You know, as a realtor, I really couldn't. I would have to hire a showing agent and this and that.
Right.
So I think the personality type is what's going to dictate your choice.
And I'm going to ask you the very repeated question and debate, the great debate. Which one is harder? Which role?
I knew you were going to ask that. I knew you were
going. Don't worry. This podcast is, I'm going to say, 90% loan officers and mortgage professionals tuning in. It's the Mortgage Pro podcast. So don't speak freely. You're only gonna.
I don't want to offend anybody. You know,
you're gonna offend 10% of the audience. So you're fine. What's harder? I know the answer. I'll speak freely if you want, but go ahead.
No, you're probably gonna agree with me. I think being a loan officer is harder, for sure. I just think that and a lot of realtors agree with this. I think if they really know our roles and what we do, just because we wear too many hats, you know, we sometimes I have to do the realtor job, because if I'm not really dealing with the realtor that is very professional, or sometimes they're brand new. And that's okay. I embrace working with brand new agents and teaching them the ropes. That's sometimes how I get relationships and I build business. It's just by being that resource and using hey, I was in your shoes. I was an agent. I had lenders that didn't really give me the time of the day. And it's been part of my success in this kind of drought loan market that we have.
Right.
So I think that, and the fact that we have to deal with so many pieces of the puzzle to put it together, guidelines, income calculation, assets, and really, I think that we control we dictate the transaction if it's going to work or not, and the pressure is really on us. Like
Right.
I just put a commitment extension here now, um, for things that just the borrower hasn't been sending me stuff, even though we've been on top of them.
Right.
And then got to explain that to the listing agent. The listing agent thinks you suck because you haven't gotten that. But like,
Right.
do they know that I've been reaching out to them every single day and they just haven't sent me
Right.
the damn bank statement?
Right.
I think the realtor's job is difficult too, for the most part.
Right.
But I think we get to another level where we're dealing with the funding of those hundreds of thousands of dollars,
Right.
and we deal with a lot more compliance too.
Right.
So I think that makes it more difficult. However, I don't think it's um, I don't think it's a general statement. I think there are realtors that take their business so seriously and so professionally, and they have such a system that maybe if I was in their shoes, I would think that their
Right.
brokerage, running their brokerage is going to be difficult. But I think for the average agent versus the average loan officer, the loan officer job and role is more difficult.
Right.
Um, which is fine. Like I chose to do this. I've seen both
And
sides.
and what do you like? What do you like about being a loan officer versus being a realtor? Is
I
it
like the
is it the
flexibility.
challenge? Is it
The
the
challenge,
challenge?
many things. I think challenge is number one. Yeah, I love a good clear to close that nobody could get it done and we got it done. I mean, there's no more heartwarming thing than that. um I think too, the flexibility of pretty much working from anywhere, as long as I have my computer and I have signal on my phone, I'm fine. um and I don't know, man, I like to be in control. I don't like, even though we deal with things that fall out of our control sometimes, but for the
Mhm.
most part, if we've pre-approved right, we got a good enough property and everyone's expectations is in the right place, we're in control for the most part. It's going to be
Right.
fine. As a realtor, you got that contract in, and you're just kind of waiting and hoping that the loan officer did their job, and
Wh-
everyone falls in line.
which could also be pretty stressful because everything's not in your control almost. It's like
Yeah,
it's like you have to kind of force things into existence or rely on other people. So it's just different types of stress. I'll tell you my personal opinion is being a loan officer
please.
is 10 times harder than being a realtor.
You
However,
said it. You
however,
said it.
it's just different. It's just different stresses,
Yeah.
different types of stress. But I just think our business is so complicated. We're dealing with not only people, because realtors are dealing with people as well, but we're dealing with people's like finances and documents and complex stories and history and like so it's just a lot to piece together behind the scenes, which everybody listening to this right now can understand, and of course you understand as well. So let's take a step back in the story. When you made the transition to realtor, from realtor to loan officer, what do you what were like the first few things that you did to really start getting deals under your belts? I know you made a transition to be an LOA first.
Yeah. Hmm.
So I'm assuming you learned some stuff about the business, but when you really started to branch out on your own, what were like the first few things that you were doing to get some business?
Yeah. So already being in real estate for about 4 years, I had somewhat of a database, even though it wasn't really organized. It was just, the people that had my phone number, and and
Right.
I had theirs. I already had some deals under my belt, and this is in 2019, so rates were low. So I what I needed first was income stability. The LOA job gave me that because I had a base
Mhm.
salary and I had a certain amount. I think I did like 5 bips at the time per loan, and like $40,000 salary. So like that right there would give me roughly 60,000 a year. So that, to me, as someone that was just going on commission, that was awesome. And at the same
Right.
time, I was learning the business and messing up in someone's dollar, which was great. Um, But what I started doing was I knew right there when I was in LOA that that was temporary, that I was going to become an LO. That was the vision. I just wanted to learn the business first. So back then, man, it was just really easy to get deals, refis and purchases because rates were so low and I already knew some people. So I slowly started either reaching out to a couple of realtors that I was friends with and they started giving me a shot. And then just some people that are kind of already had in the pipeline to purchase in the future would come back and I'm like, hey, I'm not a realtor now, I'm a loan officer, but I'll introduce you to a realtor. And then those relationships started building. But when I was in LOA, I was in LOA for about a year and a half, 2 years. I think almost every month I had a closing that I referred to my LO because it had to close under her name, that it came from me, and that gave me a nicer boost on my paycheck. Um, until I started becoming kind of busy, like I was I was kind of unhappy already to be in someone's LOA because I wanted to grow. But I started noticing my phone ringing a lot more, and also the LO that I worked with at the time, her realtors loved me. So I was like, you know what? I think I need to make a change. And at the time, my management there, they were telling me like you should just become a loan officer like full time. Like you clearly have enough business that if you close one or two a deal with an LO comp, you're already making more than an LOA. Um, and this is in 2021 when I made that transition. So it was not hard to close, many loans a month. I mean,
Right.
you could just if you wanted to knock on people's doors and ask to refi, you could,
Right.
you know.
Right.
I didn't have to do that, but my phone just started ringing, and then I started posting more on social media. Watching guys like you, really inspired me. I copied a lot of the stuff that you did and you said, and it worked, man. It worked. Like people just started noticing me, and that was a transition. Just kind of happened naturally, um, just going with the flow. But that I transitioned in a good market. I really did. And I was
Yeah.
in that market for about a year. That good
So
market.
that first foundation of being a realtor, you had somewhat of a database, you built up some sort of a name, people knew and liked you.
Yeah.
Now you're just missing that trust piece, which is earned anyway.
Hmm.
So the phone starts ringing. Let's jump to today. Like I know you're very humble. But I know you're a killer because every time I talk to you, it's like, yeah, I'm locking this loan, I'm locking that loan, and I'm submitting these files. So talk about where you're at today. I know we're in a little bit of a down market, but that's everybody across the board. Brag a little bit. Where are you at today? I know you just made a switch, which we'll talk about in a second, but give the listeners an idea of where you're at today.
Yeah, I mean, I'll just kind of like round my numbers because I don't remember them specifically. I just kind of put my head down and go to work. Honestly, maybe I should be more data driven. But last year I closed about 20 million. This year I'm probably right around 10 million at this point. Um, I got about 3 million in my pipeline. I got tons of pre-approvals out. And quite frankly, every single day, I still feel like I'm drowning. I still feel like I'm not doing enough. I still feel like there's so much to improve. And I feel like I don't have too many productive days and my days are not long enough. And meanwhile, last year I had a really bad knee injury. I slipped on ice, tore my MCL. So for about 3 months, I couldn't walk. And it was right in the beginning of the year where I had so many plans of networking and doing things like that. And I took that as, you know what, I have nothing to do. I'm just gonna work. I'm gonna put stuff on social media. I'm gonna reach out to all my clients. I'm gonna be available 24/7. I'm in bed anyway. Um, that helped me a lot. That really did. Instead of feeling bad for myself or whatever, I just worked. And then this year I had my firstborn, my son was born, and I was shooting pre-approvals in the hospital, man. I really was. Like I must have sent 5 pre-approvals while I was in there, submitted loans, was taking calls. Um, and to me, and I know someone like you as well, because I've gotten to know you a little bit, man. I'm a mortgage holic, man. I love this. I love this thing. I think we're so blessed, and I'm just on all the time. Sometimes I turn off, of course, but I'm always available. I'm always trying to put a deal together. I'm always hungry. Um, and without that in this market, you can just quit.
Right. I think you have to work twice as hard for half as many deals right now.
Yeah,
It'll turn around and pay dividends down the line. Just like when there was uncertainty in the market during COVID and the whole world was shutting down, if you were the person that's stepped up and started to really go hard, you were the guy a few months later that was out producing everybody. So same thing's gonna happen. And I admire your work ethic, because I remember seeing you,
thanks, man.
knee brace in the hospital and computer in your lap, and
Yeah,
on the screen is like you're sending a pre-approval. So I admire that. What would you say to the loan officer that's like getting started right now? Like, what should they do?
I think for a brand new loan officer, this is the best time to start. I have a friend that just started maybe 6 months ago, and he's doing really well. Like, he's closing 2, 3 deals a month for a brand new LO.
It's huge.
It's really good.
Yeah.
And I kind of mentor him a little bit, even though he's in a different company. And I see the difference of what it needs to take now to start your business back when I started and when you started,
Mm.
just because there's not a lot of good loan officers out. Honestly, like,
Right.
I don't know. I don't know if I don't know what it is. I feel like my competition, a lot of them are not very good. Um, and it's tough to get deals in. So if you hustle and you show realtors value, and you are the loan officer remembered in a bad market, in a good market, you're just gonna boom. And using my friend as an example, he's super happy for closing 2 or 3 loans a month in this kind of market, in a difficult market. Imagine a year or two from now, when he's got a little bit of a database, realtors know him from the tough times, um, and just more people are qualified because there's more affordability. This man's gonna swim in loans,
Right.
and the guys like us who've seen, when I was working on as an LOA, who would see 20 loans in a pipeline like it was nothing, going to 2 or 3, it's depressing. So but at the end of the day, man, like, look at our jobs. Even if you're closing 2 or 3 loans a month, look at the amount of money that we can do. If I had a client like myself on every file, all my clients would be super low DTIs, good credit. Like, we're still doing really well as loan officers if you're producing 1 to 3 loans a month compared to
Right.
your 9 to 5s.
Yeah. You
You know,
can't really complain, especially during when the whole world was falling apart. We were doing very, very, very well. So you can't really complain. Even if you're doing 2 deals a month, you're doing a lot better than the average person. And we lose sight of that because we were spoiled.
absolutely.
And some of us, unfortunately, started living these lavish lifestyles. And I see one of the mistakes that a lot of loan officers are making is they're not adjusting their lifestyle to the current market, or they adjusted too soon to their previous year's income. The first thing that I did when I saw, stuff started to hit the fan and rates started to shoot up, is I looked at my credit card statements for 90 days. And I was like, okay, I can cancel this. I can cancel this. I don't even use that anymore. You have to be able to have a little bit of discipline during these times as well. Not only in your personal life, but also in the business. And being as not being cheap, but being as smart as possible with the funds and how you allocate them and what
Yeah,
investments you make in the business. So yes, it's just honestly, this is to me, this is where the men separate themselves from the boys or the women from the girls.
yeah,
And you're laying that foundation again. It's like you broke down the building to then relay the foundation even better and stronger. Right now that we're kind of focusing on honing in our process. Like we have it dialed in, but like making it even better. And it's tiring because when does it end? And the answer is never. Like, so we're still making
yeah.
improvements. We're still, making improvements to our tech, how we train people, how we onboard them. Like now that we have some time, let's really, really invest into these things. Not only
I agree.
monetarily, but time wise. And I see individual loan officers doing exactly the same thing with their personal book of business. I heard the other day on some video I was watching, let's say you're a $30 million a year loan officer. You generate around $1 million of revenue. Not that you
Yeah,
make $1 million, but you generate about $1 million of revenue.
correct. Yeah,
90 something percent, I don't know the exact statistics, of small businesses never get to that revenue number. So we have to remember like what we're doing, what we are as small businesses. Each loan officer, especially if they're doing a good amount of volume, is a small business. And thinking like a business owner is only going to allow you to do more. In fact, you can't even get to 30 million without thinking like a business owner. So it's been really cool watching you crush it, overcome, have a baby. Congratulations.
thank you, thank you.
Yeah, it's cool to see. That's me personally. That's what this business has done for me. It's completely changed my life. So when I'm like looking around and like watching somebody go through the growth stages and stuff like that, it's really cool. So let's talk about the movie you just made.
Yeah,
So you were in the broker world, right? For how
yes,
long?
I was in the broker. 2021 till now, so it's almost 2 years as a
Okay.
broker.
And you got started in 2020,
So 2019,
2019.
I
Yes.
was when I was in LOA till like my first couple of months as an LO independently, I was at a direct lender. They
Mhm.
didn't have a broker license, everything was direct lending. Then I went to the broker in 2021.
Mhm.
And then now I went to Cross Country Mortgage, which is a direct lender for QMs, but for non-QMs, we got in-house
Broker.
products and we broker.
Okay. And
Yeah.
and tell me a little bit like what spurred that change? Because there's a lot of people, a lot of loan officers right now that are thinking of making moves. And I always the first thing that I always try to identify is like, why are you considering making a move? Because
Hmm.
if you don't check your motives, you're going to make a move for the wrong reasons, and then it's not going to be a fruitful change for you. But like, what was happening, or what were you thinking that caused you to start looking elsewhere?
Various things. And it was a little bit over time. The company that I was in was a smaller brokerage. They had about 20 loan officers, I would say, maybe 10 to 15 people in operations. And they worked with about 30 lenders, 30 different lenders. And as the market shifted, at least at first, when rates shot up, I felt like as a broker, I was in a really good position because a lot of direct lenders were freaking out. Rates were really high for everybody, but when I compared rates, our rates were as brokers, we were killing it. We
Right.
were always sometimes a percent lower in par rate versus a direct lender that I would price with. And at first that gave us an edge because we were getting so much business. So the company, I feel like although they were kind of being cautious of spending and maybe looking to lay people off like it was across the industry. I felt like they were thriving in the first few months because we had the edge of if anyone shopped, we could beat basically.
Mhm, mhm.
But then as things started to settle and we saw that this rate environment was going to be for the long term, I feel like direct lenders, they adapted to the market. And I started noticing that I wasn't winning as many offers anymore. And that direct lenders had similar rates or could get loan concessions to beat the rates. So that started not to matter as much. Although to be clear, brokers for the most part are going to have better rates. I've already noticed that across the board, but now the gap isn't 1% or 100 basis points. Now,
Yeah.
if I'm going to compare, it's going to be either the same or maybe 0.25, higher.
Right.
So as I started noticing the shift, I started seeing that, maybe the rate doesn't matter that much anymore if I'm providing good service. But then I feel like the company I was in started feeling a little bit of the drought that the direct lenders maybe felt at first and started laying people off. But they started laying people off a little later on in the game. So we were losing processors, assistants, and I just started feeling like resources were being taken away from me. And my vision now, and listening to guys like you and others that I talk to, is that things are going to come back. This is a roller coaster. Let's perfect our system. Let's make sure the foundation, like we were talking about, is laid out, and we have a good team, a good system. Because when things come back, they're going to come back quickly, and we want to be able to capitalize. And I felt like I was not going to be able to do that at a small broker shop, and I needed to go somewhere where there was going to be plenty of resources, where
Right.
money being short was not something that was being talked about. And that's why I made the move from a small broker shop to a direct lender across country, because I came in, I already got an assistant, a full-time assistant that they're paying for, where before I had a shared assistant with 5 other LOs, where the process was whatever the company's process, it wasn't my process.
Right.
So when I came in now, my assistant started this week. I'm training her, and I'm training her my way with my vision. And I know she's only going to be ready in 6 months to a year, but 6 months to a year, maybe rates are lower, and
Right.
that's when things are getting busier, and I can take on the demand and have my vision done. And it's a lot harder to do that while you're really busy and
Mhm.
while loans are kind of falling from the sky, like we've seen.
Yeah.
Um, so to me, the structure that a direct lender is able to give me, not only in support, but underwriting desk up front, if I want to put good files through, TBD pre-approvals, if I want to put good files through, all that kind of support really matters. As a broker, you rely a lot on account executives, so
Mhm.
I have a funky scenario. I'm going to talk to 3 or 4 different executives from UWM, PennyMac, or
Right.
what have you. And for the most part, they're salespeople. They're going to say yes. Hey, can this tax returns have not been filed yet? Can I send it in? After it's been under contract? Yeah, just send it in, sure. And then it doesn't work, because
Yeah.
they're so that's stuff. So it's very good to know up front if the deal is going to work and it's within your system.
Right.
So I felt like to take my business to a more professional level where there's less mistakes happening, better foundation, more resources. I needed to take it somewhere else where it's going to be a place where it's a big player. And just to wrap up the rate comparison thing, um, I thought that maybe my business would be impacted when I made the change because of that quarter of a point difference or whatever it is. And I've been here for about 5 weeks. I have not lost a deal because of rate.
Knock on wood. Because now you're about to lose one.
Happen. It's gonna happen. It's gonna happen. And it's fine.
But yeah,
Part of the
so
game.
I think when it comes to rate difference and model difference, what each platform allows or offers. You know, you have the broker world obviously operating on slimmer margins, maybe less support. And then you have the banking world or direct lender world where the margins may be more, but they're offering more support. That's like the general like sacrifice, if you will, or equation. Now, what I think matters more, instead of platform versus platform, it's which company in the platform, because some broker shops you can get way more support than some direct lenders. Some direct lenders have better rates than some brokers. So it's truly just about finding the right fit for you. But I think what you talked about, having creative control, having like an established backing is so important.
Yeah.
Now's not the time to really join a company that's like trying to figure stuff out, or has low morale, or is like, you know, all they're focused on is saving and conserving.
And keeping the doors open.
And listen, everybody's doing that to some extent. There's
Yeah.
there's survival moves that you need to make right now. However, if that's the environment and that's all you feel, and it's either you're a part of a growing organization or a dying organization. There's no really in between, because it's either or. You're either moving forward or backwards. So I can completely understand everything that you talked about, and I know you're going to be successful wherever you go. So congratulations on the move.
Thanks.
Now, tell me a little bit about what you spoke about, hiring and training an assistant right now. That's when I hired my first assistant and I started to build a team and hire LOs and stuff. That's when I realized, like, okay, this mortgage business is not just mortgages. It's hiring didn't come easy to me. Finding people did. Hiring and training the right people, and training them properly didn't come easy to me. So tell me a little bit about your experience so far, on how it is training a brand new LOA.
Yeah, so my LOA has no experience. She was working at Starbucks as a barista. She's 21 years old. So her resume is not what stood out to me. What stood out to me was the fact that she's bilingual. She speaks Portuguese and English, which is something that I need, because my clients are kind of half, either Portuguese or English speakers. But mostly the willingness to grow, being hungry, and the fact that she was a manager at a Starbucks for almost 2 years tells me that, one, she has good customer service, she can work under pressure, and she can think on her feet. So I was looking for those qualities. So I think that I could have picked up already an experienced LOA, because God knows there's plenty available with all the layoffs that we had. However, I didn't really want to pick anyone up that had bad habits. You know, it's kind of like if you're a musician and you play the guitar and you learned with a teacher that didn't show you how to shape up your hand correctly and play the chords correctly, and now you're playing for like a year, and now you change teachers, that other teacher is going to be like, dude, you need to relearn all of this, you know?
Right.
I didn't really want to do that again, because I have a vision of the way I want to do things. So to me I wanted someone with no experience or very little experience. I'm patient. So I spoke to a few people, and she stood out the most because she was fed up with where she was. She wanted somewhere to grow. She's young. And coming on as an LOA was already a raise for her in pay. So she's happy. I'm happy. Now the training starts. And I think that if you're going to hire an assistant, be ready to be really, really patient. I mean, because Eric is going to learn in a speed and in a way. I'm going to learn in a different speed in another way. I was an LOA who was basically dropped in a team where when I came in, There was two other LOAs, and they both quit the same week that I joined in the summer to an LO that did 50 million a year. She literally was like, figure it out. I learned beautifully that way because I'm okay with jumping on fire and knowing how to get out of it. But not everyone is.
Right.
So I think it's learning that person's personality, how they're going to learn, being patient. And right now, all I'm really doing is she's shadowing me. She's taking the trainings that corporate gives, and I already had her, store away docs this week, and I literally told her, "Hey, here's a list of docs. Store it away and label it how you think it is. We're gonna go over it after, and I'm gonna tell you if it was correct or not." And to
Right.
my surprise, she did really well.
Right.
So
It's tough, man. I think part of hiring, part is having success hiring is clearly identifying that person's role before they even step in the door, before you even put out the job ad. Like, what am I hiring for? I know my mistakes with one of my mistakes with hiring was I needed an LOA, right? Because I was doing 6-7 deals a month and I wanted to get to 12, right?
mhm,
And I realized I needed a second pair of hands. There was no other way to do it. So let me go hire somebody. So I found somebody, but I didn't clearly identify, here's what that person is going to do day one. Here's what I expect this person to learn by month 3, right? So having some sort of like clear job outline and tasks and responsibilities of that role was a game changer for me. And now, I've hired and let go, and it's a searching process to find the right person. One person was really good for that stage of my career, but I needed somebody else for the next stage of where we were going. The role has changed a little bit because I realized, okay, let me not delegate this thing. Let me delegate this thing instead. So like I was saying before about like perfecting the business and working on the process, it's never ending. But it sounds like you already know that just hiring and finding a person is not going to solve the problem. It's a investment in time. And like you said, she's not going to be really up and running for the next few months. It's good that you realize that, because to me, I was like, what do you mean you don't understand this? Like I was maybe a little less patient than you, but I know the struggle. I'm actually training a loan coordinator right now. She has experience in the mortgage industry. She was a opener,
mhm.
so ordering services, and at least she already knows how to use Encompass. And that to me, I needed, because although I'm less busy, I wanted to at least find somebody that has experience with Encompass and knows what a tax return looks like, and a
Yeah,
W-2 and a pay stub, et cetera. So like, as long as you had that, I can build on everything else. I didn't want to find somebody that I needed to teach the program of Encompass to, and here's what a tax return looks like, and here's a pay stub and whatever. So which I've done both at this point. But she's doing really well so far. And I also think a big part of hiring successfully is making sure they're a cultural fit
yeah,
before. When I say cultural fit, I mean, like, we're not an organization that I'm not saying we don't care about work-life balance, but if you're supposed to get off at 6 and somebody sends you an email at 5:55 with a quick task that you can accomplish in maybe 15 minutes, in our world, everybody on our team, without even saying or forcing it as a rule, they take it on themselves to knock that out really quick. And that's the culture that you need to make sure if the person is a good fit for. Some people are looking for something that you turn off the phone at 6 o'clock on the dot and save it for tomorrow. That's just not for us. There's plenty of companies like that. And I'm not saying either route is right or wrong, but making sure that somebody's going to fit into how you guys work is also so important. But I'm glad it's going well for you.
Yeah, and I think you touched up on something that is what I've been preaching this a lot. There's no right way or wrong way to do this business.
Mhm.
There's no set route to get to the pot of the gold. We
Mhm.
figure it out, and we figure it out by doing it repetitively and learning from the people around us. As long as you're not committing fraud, there's no right or
Right.
wrong way to do this. And the way you handle things might be different than mine. And then we just look at our production and see if we accomplished what we needed, you know?
What before I let you go, one last question, because I'm always interested in hearing. Uh Give me like a rundown of your file flow now that you are training your assistant. Like what are you having? It's a her, right? She's a
To
her.
her.
She's
Yeah.
a girl.
Yeah. She's just a girl.
It's a her. That sounds wrong. What are you having her do? What are you doing? Where does she pick up the file? Where do you leave off? What's sort of the file flow?
So I already have a file full project, but since she's still training and learning Encompass, she hasn't gone in and actually executed that yet. I've been using my manager's assistants to help me out. But how I envision and like to do it is I always have, I usually get the lead from the realtor, past client, whoever. Um, I reach out right away. I mean, it's usually in a text or an email. Hey, when can we talk? I need 10, 15 minutes of your time. Throw it in the calendar. I have that initial conversation, not someone else.
Right.
That client needs to know right away that it's with me that they're dealing with, that I'm in the driver's seat. I speak with them, put it on the CRM, talk to the client with the CRM open. So you're taking notes on everything that you're saying. Don't trust your memory. As soon as I'm off the phone, I already have a template on my email of, list of docs that I need, application. I kind of edit the list of docs that I need based on the initial conversation. And that initial conversation for me, it's 5 to 10 minutes on the dot, no longer, unless it's a very, crazy situation, but it's usually
Mhm.
5 to 10 minutes. And on those 5 to 10 minutes, I went over assets, credit, income, objectives. I know exactly what to do. We'll have a follow-up conversation after I have your documentation.
Right.
So I send out that email. I put a task for the assistant to start following up with that client. Now we're following up with the client in every 2 days, either by text, a phone call, or an email, so we get something back. Once we get something back, application and documentations, that assistant now needs to filter through, was the application done correctly? Did all of the documentations that I requested, are they there? If it's missing a W-2 and I need 2 years, she reaches out to the client, hey, we're missing a W-2. I don't want to see that file until it's complete. Once it's complete, she sends it over to me. She sets up Encompass, pulls credit, labels the documents, leaves it ready. I'm going to look at it. I'm going to pre-approve it. If there's an additional document that I need, we go with that back and forth, but she keeps following up. Pre-approved. From that point on, that assistant reaches out to my realtors and not necessarily all my realtors, but all my clients that are pre-approved every weekend saying, hey, we're available this weekend if you need to run numbers, if you need anything, and that person available is me. I just want to stay on top of mind.
Right.
Once offers accepted, the assistant takes on the documentation, sends disclosures, make sure the file is tight. That goes on to processing, and then I just kind of micromanage from there, and she manages the pipeline with the processor. So
Gotcha.
it's just I want to be pulled in to make big decisions and to be the face of the transaction. I think that's the only way that you can do it with volume in a high level.
I agree. And at least I feel like handling the initial call should never be delegated. That's my personal opinion. That's what works for me. Just because that initial call, I'm setting up the file basically in my head. Like I know what direction we need to go in.
Yeah.
I know what documents we're going to need. I know what potential problems we're going to suffer. I know if it's a realistic scenario, right?
Hmm.
Sometimes, the client's coming to me. I make $30,000 a year. I have $2,000 in the bank. I kind of know how to, not that I'm not going to get back to that person, but I know like, okay, we're going to need to kind of rush them through the process and let them know, like, here's what you qualify for. Here's how to qualify for more. I know from day one how that's going to go for the most part. So I feel like having that initial conversation is something the loan officer should do. And then the more clerical stuff, time consuming, filling in the blanks, reviewing documents, as well as making sure that we have everything, saving stuff. That's the stuff that you should, offload or delegate. It comes back to that dollar per hour concept, right? Would you, figure out wherever you're at in your business right now, for the loan officers that are listening, figure out how much you make per hour. And then ask yourself, would you pay somebody that much money to do the things that you're doing on a daily basis, such as saving documents? So if you're a loan officer and you do that calculation and you make $200 per hour, $100 per hour, $150 per hour, whatever the number is, would you pay somebody $100 an hour to label documents? And if the answer is no, that's a task that you might want to delegate. Delegating is a tough topic though, because you have to know how to delegate properly. You have to know how to train, right? I always, I made the mistake of like, here are the things that you need to do, and just expecting that person to understand the way that I want them done. So it's a constant struggle. And this is when the mortgage business becomes a business, when that this is where it really begins, I believe, because now you're learning people and how to hire and how to train and how to make sure the process and the wheels are moving. And it's a struggle. It's a struggle. So I appreciate your time. I love your story. I love everything about what you stand for. Like I said, I admire your work ethic.
Thanks.
And I know the future is only going to be successful.
Yeah, no, thank you so much for having me. I've been following you since probably 2019 when I got my license. I was just thinking how I found you on Instagram was because when I was an agent, I used to try to always use I'm not your average agent as kind of like a catchphrase. And I think I was looking for a handle, not your average lender or something. I found you and I'm like, bastard, I already took it. But then I loved your content, and yeah, I'm a big fan, and it's an honor really to be talking here with you.
I appreciate it, man. Thank you for your time, and we'll have you back on soon. You'll come to New York City too.
Yeah, for sure, for sure.
All right, Terry.
All right, brother. Thank you.
No problem.